property to your children might sound like a smart way to avoid inheritance tax, but it can backfire badly if you don't do it properly. In this video, I'll break down how gifting works, what tax it triggers, and how to do it safely. Let's say you own a rental or second home and want to pass it to your kids while you're still alive. Many parents assume, if I give my property now, it's out of my estate, no tax later. But here's what HMRC says. You've made a disposal even if no money changes hands. That means capital gains tax might be due now, and the gift still counts for inheritance tax if you die within 7 years. And if you're still living in the property, HMRC sees it as a gift with reservation of benefit. It stays in your estate anyway. So, what taxes apply? 1. Capital gains tax or CGT, charged based on market value at the time of the gift, applies if the property has increased in value since you bought it. The CGT allowance for 2025-26 is just £3,000, and the rates are 18% or 24% depending on your income. Even if no cash changes hands, the tax is based on what the property could sell for today. 2. Inheritance tax or IHT still applies if you die within 7 years of the gift. Full IHT if you die within 3 years. Taper relief applies from years 4 to 7. Worst case, you give the property, pay CGT now, and your estate still pays IHT later. Now, let's look at how to give property the right way. You've got a few options, each with trade-offs. 1. Outright gift and move out. This works best if you're gifting a property you don't live in. Removes it from your estate after 7 years and no reservation rules. 2. Gift but pay full market rent. If you want to keep living in the property, you must pay rent at commercial rates. Helps avoid reservation rules and remove the asset from your estate. And what if you still live in the property? Here's where people often get caught out, especially with their main home. I recently spoke to someone in this exact situation. He owns his main home jointly with his wife and wants to gift it to their daughter, now not in his will. But here's the thing, he plans to continue living in it after the transfer. That's a red flag. Unless he moves out or pays full market rent to his daughter, HMRC treats the gift as if it didn't really happen for inheritance tax purposes. It becomes a gift with reservation of benefit. That means the property stays in his estate, the 7-year IHT clock doesn't run properly, there's no tax saving, and possibly double trouble later. This is a classic scenario, and unless the right structure is in place, it undoes the whole point of gifting. Now, if you have been watching so far, thank you. I appreciate your support. Please remember to like, share, and subscribe to our channel for more tax tips and advice. Now let's continue. 3. Use a trust. It can provide asset protection and structure, but can trigger immediate CGT and potential IHT. Also needs legal advice and careful planning. Gifting a property is never just a personal decision. It's a tax and legal decision too. Before you do anything, get advice. The wrong approach could cost your family thousands. Book a clarity call or a full property tax review. I'm Dora from Grace Certified Accountants. Please remember to like, share, and subscribe to our channel. for more tax tips and advice. Thanks for watching. I'll see you again soon.